Tom Leahy. You are head of EMEA Real Assets Research at MSCI. Thank you for joining us on BiTV.
No problem. Yeah, thanks for having me.
MSCI recently presented a new research that showed that the volume of European commercial real estate investment transaction fell 37% in Europe in the third quarter. How do you explain this decline?
Yeah, it's a good question. I mean, I think we're really seeing now the impact of what's happening in the war in Ukraine with higher inflation because of higher energy costs and some of the supply constraints coming out of the pandemic. So that's led through to higher interest rates and faltering economic growth. And that's created a lot of uncertainty in the commercial property market. We've had this very lengthy period where interest rates have been low, and that's pushed a lot of capital into the global real estate market, not just in Europe, but globally. And that low interest rate environment has come to quite a sharp halt and gone into reverse. And so that's creating issues for property investors especially around financing costs. The cost of capital has increased very sharply this year, and that's made some deals unviable. And there's also the concerns around economic growth with high inflation eating into consumer confidence. You know, if you look at the numbers from the European Union, European consumer confidence is at its lowest ever level. So that's obviously feeding through into economic growth prospects, which look pretty poor really for the last quarter of this year and into 2023. And so that's feeding into the property investment numbers. And so that's why volumes are down 37% on the quarter, and Q3 of this year looks pretty slow on a historical basis, really.
And therefore, I'm guessing not every asset class is equal facing this phenomenon. What sectors do you see maybe as the most vulnerable in the current market environment?
Yeah, that's clearly true. I mean, if we think back to the period during the pandemic and just after, the apartment and the industrial sector were really performed very strongly. So European industrial and UK industrial property total returns have been in the high double digits. And so those parts of the market have done relatively well in terms of transaction volumes, actually. So industrial transaction volumes have held up relatively well compared to, let's say, office and retail, for example. But I think there are concerns about the sustainability of that. On the positive side, you've got quite a tight occupier market across a lot of Europe. So rents are still growing for industrial property according to MSCI data. But then also capital values are falling because yields are moving out because of this higher cost of capital. So there's sort of opposing forces at work there in the industrial market. But certainly in terms of transaction volumes, they've held up better than elsewhere in the market. In terms of parts of the market that are not looking so good, office investment is down quite substantially. So is retail and also hotel investment as well. So I think with offices, you've got sort of two structural issues which are really impacting office investment, which are the shift to a hybrid model, which I think most investors expect that to stay at least in the short to medium term, and that's going to impact on occupier demand for office property. And you've also got the emphasis on decarbonisation as well. So most of the big property occupiers and owners want to decarbonise their portfolios. They've got quite ambitious net zero goals. And so that's a problem for offices that don't meet their standards or can't meet those standards. So I think there's clearly an issue there for buildings that require significant amounts of capital expenditure, for example, because debt is becoming increasingly difficult to obtain at the moment.
Okay, and let's talk about geographies as well, because your report compares some of the European markets, and obviously Business Immo is a French media group, so I have to ask a question about France. MSCI reports that volume fell 34% in Q3 in France, but that Paris overtook Berlin as Europe's second largest investment destination. How do you see the French commercial real estate market positioned for the crisis that many investors expect in the coming months?
Yeah, I mean, if you look at the transaction volumes in Q3, Europe's three biggest markets, and as they always are, the UK, Germany, and France, and more or less in that order, though Germany has been ahead of the UK a little bit in recent years. But actually, all three have seen investment volumes fall by around a third in the third quarter of the year. So there's not a huge amount of differentiation there. So UK was down 33%, Germany 36%, as you said, France down 34%. So actually very similar, in fact, in terms of the slowdown in transaction volumes. In terms of how France is set to weather this uncertain environment that we're in, if you look at the economic growth forecast from the likes of Oxford Economics, they're expecting France to slightly outperform some of its European neighbours, so outperform Germany, for example. And I think that's partly to do with the structure of the French economy and perhaps how it gets its energy. So maybe there's a little bit of an upside there for France in comparison with some European economies. I think the inflationary spike in France hasn't been as bad as elsewhere as well, so that doesn't eat into real incomes as much as it has done in the UK or Germany, for example. So that, I think that's on the positive side. You've also got some things like the Paris Olympics in 2024 coming through, the Grand Paris plan, which has spurred quite a lot of investment into the areas around the edge of the city of Paris. So that's on the sort of the positive side. So the reasons why France might fare slightly better. But I think you've still got these macroeconomic issues, and I think the risks are still to the downside, certainly in terms of where inflation might go, the difficulties central banks might have in containing inflation, and then what that does to economic growth, and then how that feeds into the real estate market.
Okay, thank you very much for this insight. Sadly, that's all the time we have today. Thank you a lot for your time, and thank you all for joining us. See you soon on BiTV.
Thank you.